Let's go right back to the edge of the trading floor in Chicago. Oliver Sloup is there. All right, Oliver, over here in this live cattle market, you and I were talking about this there during the break. It was kind of weak, but just kind of hovering around that unchanged on that December contract. Just now, I just check here again, we're just fractionally higher again. So it just kind of seems like this market's looking for direction here today.
Yeah, a little more direction. We sold off a little bit on the open, but there's been buyers willing, ready, and able to step in on any sort of a pullback we've had really over the past 2 months. It's been an uninterrupted rally, which has taken futures into overbought territory. Now, a lot of times you think overbought means that we need to see a retracement. That's kind of where we've been, especially after such a strong rally, but we have not gotten a pullback. We've been overbought for the better part of the last 2 weeks, and we've seen the cash market continue to stabilize, offering support to the futures market. So those two are working in tandem, hand in hand. If we were to see cash maybe steady out here over the next couple of weeks, I wouldn't be surprised to see that put a halt to the rally, and you start to see funds capitalizing on their recent long position and liquidating that, providing a little bit of a healthy pullback. Now, the support side of things, 114.25 to 115 is the first pocket that we're looking at. This is previous resistance, now becomes support. That's kind of the must-hold area, but as you can see on the chart, over the past couple of months, it has been just a stair-step higher, basically uninterrupted. So the bulls in full control here as the funds add to their position last week, about 10,000 contracts. They're sitting net long about 31,000.
You know, the feeders aren't quite as enthusiastic to go higher, although I think it's going to take a little more work on the live side and the cash side, like you mentioned, to get us to that 150 in the feeders. That seems to be a target in some folks' minds.
It is certainly not out of the question. We've kind of been in consolidation mode for feeder cattle, looking at the January contract, essentially 138 to about 143 over the last couple of weeks, looking for a breakout or a breakdown. If we were to break out with consecutive closes above the top end of that 143, I wouldn't be surprised to see that open the door for a run towards that psychologically significant 150 level. But for now, just kind of play in that range, buy the low end, sell the top end until we get a fundamental catalyst to break us out or break us down.
Hogs down 75 to $1.50, $1.52 on that nearby December contract. Your thoughts over there?
Well, speaking of ranges, that's with the feeders. The lean hogs have been essentially range bound too, 65 to 72, give or take, testing towards the bottom end of that 65. If we see consecutive closes out above or down below here, we would not be surprised to see that lead to some accelerated selling pressure. Keep in mind there is a gap still open from September 11th that comes in closer to 61.50. So that is a caution flag in our mind. We'd like to buy down there, but right here at the bottom end of that range is not optimistic at this point.
Oliver, it's always good to check in with you. Oliver Sloup, Blue Line Futures in Chicago. He is the vice president there, and he gets us all the latest.
Yeah, he sure does.
Okay.
Thank you, John.